First, you want to identify the trend. So are we in a uptrend, or are we in a downtrend, or are we consolidating? This is important so you understand the direction the market is going to next, and if you need to be into a buy or looking for sells. Next, we have a couple of rules. So after you have identified what trend the market is in, next we need to identify our impulse. So the rule to the impulse is that it all should be one color. So right here you can clearly see this impulse is all green candles. It's important that your impulse is all one color, or impulse is all green candles. Next, we need to identify the retracement. The rules to the retracement is that it should at least have two daily candles, at least two daily candles, and all the candles within the retracement needs to be all one color. Just like the impulse needs to be all one color, or retracement also needs to be all one color, and at least two daily candles. Next, impulse. So this was our impulse, needs to break and close above the highest point of the previous structure. Because the trend is a bullish trend, so an uptrend, we need our impulse to break and close above the highest point of the previous structure. And clearly see this candle broke and closed above the highest point of the previous structure. Our retracement should at least come back to the 38% of the fib, because a great retracement is at least a retracement that has pulled back to the 38% of the fib. So this was our impulse, and the retracement came back at least to the 38% on the fib. After we have identified our trend on the daily, together with the impulse and the retracement, we go to the weekly time frame. And on the weekly time frame, we need the weekly to support our daily bias. So on the daily, it's an uptrend. We're looking for price to go up. We need the weekly to support this analysis. So in this case, you see the weekly is at a support level. So on the weekly, we identify our support or resistance that could be of influence. Price is now at support on the weekly. So this help us in our analysis that the price would likely continue higher. So on the weekly, you identify your support and resistance that could be of influence to the trade. Then we go back to the daily time frame. And on the daily time frame, we are going to draw the fib in the opposite direction of the retracement. So from the end of the retracement to the beginning. This is because we want to measure the distance of the new impulse. So we expect the new impulse will at least travel to the negative 27, but I will explain that later. At least to the negative 27 on the fib. So on the daily, after we come from the weekly, we draw the fib in the opposite direction of the retracement to measure the distance of the new impulse that is going to form. So from the end of the retracement to the beginning. Then we go to the 4-hour, and on the 4-hour, we're going to wait for a break of the 61 level. That will be this green line. As soon as we have the break and close of this 61 level on the fib, this indicates that the new impulse is now going to start. So you should have a break and close on the 61 level on the Fibonacci. This indicates that the new impulse is going to start. As you can see right here, we have the break and close of the 61 level on the fib. Now you're going to put your entry on the 61 level. Your stop loss goes on the 88 and your take profit goes on the negative 27 on the fib. Your take profit always goes on the negative 27, and the only thing that you're able to adjust is your entry and your stop loss. So in this case, you see price came down here, and now has it pushed to break above this 61 level. In the normal case, your entry will go on the 61 and your stop loss on the 88. But as you can see, the low of this push is all the way down here. So price can come back all the way down here and still continue higher. So if you want to be protected by this low, you can move your entry somewhere down here and your stop loss down here. Just make sure you have at least a 1 to 3 risk to reward. So normally we put our entry on the 61 and the stop loss on the 88. But sometimes you will see that the low is all the way down here below the 88 level. So if you then want to be protected by the structural low, you can adjust your entry by placing it lower than this 61 level and adjust your stop loss to under the structural low. As soon as price breaks and close above the 38, you move your stop loss to break even. So you can see right here, our entry was on the 61. Price came, tagged us into the trade, had an impulse. As soon as price breaks and close above the 61, we can now move our stop loss to break even and it becomes a risk-free trade. And you can see price came back, tapped us in, closed above the 38, our stop loss goes to break even, and price went all the way to our take profit of the negative 27. Give us a 1 to 3 risk reward at least. So this is everything. I'm now going to show you a real life example on the chart. I only place new orders within this time frame. So 1 a.m. to 1 p.m. Eastern. I do not open any new trades outside of this time window. Another rule is that if price has already closed above or below, depending on the trend, bullish or bearish, the 38 level before tapping us into the trade, we do not take the setup. So say price now has an impulse to go above the 38 level, close above without tapping us back into this trade. This would mean we are not going to take the setup anymore. So if price breaks and close above the 38 before tapping you into the trade, we are not going to take this setup. So those are the two added rules. The time window from 1 a.m. and 1 p.m. and if price has already closed above or below depending on the trend of the 38 level of the fib. If this is the case, we do not take the trade. So now I'm going to show you a real life example on the charts from start to finish. First, we want to identify the direction of the market. So what is the trend? We can clearly see if we look to the left, we were previously in a downtrend creating lower highs and lower low. The lower high got broken to shift the trend into a bullish market, so an uptrend, creating higher lows, higher high, higher lows, and now we have our impulse followed by a retracement. So we can see we are now in a uptrend. Second, we want to identify the impulse if we have a correct impulse. So this is going to be our impulse. You can see it is all one color. Remember the rule. The impulse needs to be all one color. This impulse is all one color. Next, the retracement needs to be at least 2 daily candle close. And the retracement also needs to be all one color. So you can see we have a retracement of 2 daily candles and they are all one color. Next step is to identify if the retracement has pulled back at least to the 38 level on the fib. This is not a rule, but a great retracement is going to come back at least to the 38 level on the fib. So you can see our retracement has hit this 38 level. Again, it is not a rule, but a great retracement will likely retrace to at least the 38 level. After we identify our setup on the daily, so the trend or impulse, retracement, at least to the 38, all one color, we want to identify if our impulse has closed above the highest point of the previous structure. So I'm going to draw it one more time. This was uptrend. This is now the highest point. The previous structure, create a higher low, higher high, retracement. So as price closed above the highest point of the previous structure, yes, you can clearly see this impulse has broken and closed above the highest point of the previous structure. After we identify our setup on the daily, we go to the weekly time frame. So on the weekly, we are going to identify a support or resistance that could be of influence to our trade. If I look to my left, you can see price came off of this support level right here. So if I look to my left, you can see support, got broken, resistance, resistance, turned back into support, support, and now price came back to this level, used it as support once again to find momentum to continue to the upside. I can also identify a resistance level. This right here would be my resistance level. Remember, it should at least have 3 touches. You can see 1, 2, 3, 4. So this is a great resistance level. Price isn't at that resistance level yet. There is still more room for price to go before it reaches this resistance level. So price came off of this strong support level and looking to head to this resistance level, but it isn't there yet. So there's still more room to the upside. After we identify our support or resistance on the weekly, we go back to the daily. And on the daily, we want to draw the fib in the opposite direction of the retracement. This is to measure the distance of the new impulse. So we expect the new impulse to come at least to the negative 27 before it has its retracement to continue. So we draw it from the end of the retracement to the beginning because we expect the new impulse to at least travel to the negative 27 before having its pullback. Then we go to the 4 hour. On the 4 hour, we're going to wait until we have the break and close above this 61 level. So right here, you can see we have a clear break and close above this 61 level. Once we have the break, we can now place our order. So my buy limit order is going to go on the 61 level. My stop loss is going to go on the 88 level and my take profit on the negative 27. Take profit is always going to be on the negative 27. You can always adjust your entry from the 61 level and the stop loss on the 88 if you wish to create a greater risk to reward, but you at least need a 1 to 3. So right now we're waiting until price step us into this trade. As you can see, we have now entered this trade. As soon as price breaks and closes above the 38 level, our stop loss goes to break even. So it becomes a risk-free trade. As you see, price continued all the way to our take profit to give us a 1 to 3. So this is how you use the strategy. So you first on the daily identify your setup, impulse all one color, retracement at least 2 daily candles, all one color, impulse broken and closed above the previous highest point of the previous structure, followed by a retracement at least to the 38 level. On the weekly, you identify your support or resistance that could be of influence. Then you come back to the daily, you draw your fib from the end of the retracement to the beginning, because we predict that price is at least going to travel to the negative 27 before its retracement. On the 4 hour, you wait for the break and close of the 61 level. As soon as you have the break of the 61 level, you place your order on the 61, stop loss 88, take profit negative 27. You wait until you get tapped back into the trade, and as soon as price breaks this 38 level and close above, your stop loss now goes to break even and it becomes a risk-free trade.